21st September 2023, Thursday, MAO with Cal. Now, pausing the rate is not a good sign at all, right? I've been saying this for some time, and I'm going to reiterate this. Now, last night, as expected, Jerome Powell and friends decided to pause the interest rate. Now, the good part is that gives Wall Street a bit of breather. But the bad thing is that they are saying that there will be another rate hike coming in, right? But the worst thing is that by pausing it and even cutting it right now or cutting it later, it's not going to send the right vibes to the market, because that means that recession is looming. In fact, itself, the government yields is going up. It's a very terrible thing to start off with. So let me tell you more in detail very shortly. Let's go. All right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, let's go through what happened last night, okay? So first of all, the Dow was up by 148 points before the FOMC meeting outcome. The S&P was up by 8 points, and the Nasdaq was coming off already. Now, we all know that hiking on the interest rate is not going to help the technology sector. And when Steve came out and say what happened was the outcome, right? Straight away, we saw instant reaction. The US Nasdaq started to fall pretty fast because of that. And you can see that the 2-year yield sharply went up from 5.07 all the way to 5.12. That's pretty high. And of course, the US dollar also mount higher. So all these tells you that, right, when the Federal Reserve start to leave interest rate alone, but decide to have more coming in, this will basically cause all this to happen. Now, the thing is this, we have profited from the S&P 500. Now, over the last few days, we'll be calling for sell over here. Now, why? Because it's have color turn from yellow turns to red. We know that this is a sell signal, and we're advocating and telling people to sell. And of course, did we profit from that itself? Yes, you can see that. We gave our trade calls to our students, and they profited from the market. But that's not the point. The point is this: I want to tell you that if you didn't make money from that, means something is wrong. So let's go through this. First of all, we know that the Federal Reserve declined to hike, but points to a rate staying higher for a longer period of time. Now, that's not a good sign, because that will create the money market pressure. And now we have this Swiss National Bank decided to hold rates. In fact, so that ends their rate hike streak. But again, this is not going to be good. All right, all these are actually a very bad sign. Now, we all know that, right, we're going to have likely a rate hike in November, but 31.5%. Okay, so the thing is this, just 1 day ago, this number was at 29.4%. So that more people are looking for a rate hike in November. But the question is this is not a good sign. Now, why am I repeating? It's like a broken recorder, because let me share this with you right now. So while this signals another increase coming in, that will add some Wall Street pressure. But more important thing is that, right, it is likely to end the hiking campaign, apparently, according to what Wall Street is expecting. So let's take a look at the dot plot right now. The new dot plot shows that, right, all the committee members, majority of them are expecting rate hike one more time. At least out of 19 of them, 12 of them is expecting one more rate hike. Okay, then interestingly for 2024, right, majority of them is looking for a rate cut. Okay, now this is very interesting. All right, this is the number now. We're looking at now is 5.5, right? Some of them are looking at 4.5 instead for next year itself. Okay, so why is that so? There's only one reason for that. If they're going to rate cut, it's because they are either very confident that inflation is curbed or something big is going to happen. And obviously, what's big enough for a rate cut? It will always be a recession. So in fact, there should be a technical recession coming in next year, but I believe that the selling will start now. That means that if, let's say, there'll be a technical recession, let's say next year, because of this prolonged thingy, that means, let's say we do it in March example, then 6 months before March itself, which is like probably now, there will be selling effect, because the stock market is always earlier than the technical recession, by 6 months and earlier. So that is the reason why I feel that there'll be some selling this week, this month, and even next month itself. So Federal Reserve, Jerome Powell says that we need to see more progress before willing to reach to that conclusion, that to see whether inflation is actually being tamed, in fact. And in fact itself, right, they are looking at this number to really go down only like 2024, 2025. So the thing is this chart has been there for 1970s. Now, every time when there's an inverted yield curve, it's predicted the last 7 recessions. And every time this thing happened, take a look here, guys. I want to show you this is very important. This is really, really important. Take a look. Now, every time when there's inversion, okay, that is a first sign of trouble. Then when the inversions have to turn the other way around, right, means they have to go upwards, right, it's because of rate pause or rate cut. So when that all happened, where you have inversion, then followed by the turning up itself, you can see it's instant recession. So you can see that it went below, then it turns up, recession, go back below, turns up, recession. Can you see that? This is where the concern right now. So we are actually seeing an inversion, yes, and now it's turning up. The spread itself is turning up because now there's rate pause. So when this all happened and stuff, right, that means recession next year is really on the cards, all right? And this is something that you need to be very, very careful. Now with this here itself, the household excess saving is at ridiculous level. Now back in 2020, when you had all the stimulus check coming in, personal saving account went up all the way. In 2021 itself, Federal Reserve pumped more money and then it went up again. But over the last 2 years, 22, 23, oh my gosh, look at this. The saving itself is no longer available. In fact, itself is exhaustion, okay? It's exhaustion. And the Americans are really exhausting their excess saving. And this could run out by this quarter, which is October. My goodness, this is really incredible stuff. So if you look at it right now, right, you can see the 10-year yield is now basically dragging itself upward. The 10-year yield is the one in candlestick, yeah? This is the 10-year yield that's moving up right now. And the Dow Jones itself is coming down because the market noticed that this is not going to stay. It may go higher. The last time we saw the 10-year yield, that was back in October last year. That was where the peak was before it pulls back. Now we are trading even higher than the October peak. So if that's going to happen, then there is a possibility that the US stock market may pull. But of course, back then itself, the yield pulled back. That's why the stock market went higher. So what the thing is this, if the interest rate, the yield couldn't go higher, the stock market may come down. And that's the reason why I think that we should be very careful. And the boys has already probably made their move long time ago. Now, let's look at the Dow Jones right now. This is the Dow outlook, and it's something you need to really, really take a look right now, everyone. Let's take a look here. The Dow has tried to stay above the MA30 back in September. It failed, and now it tried again on the mid-September. It failed, and now it's the last week of September. In a way, it also failed. So by basically rejecting the MA30, there is a very high possibility for the Dow Jones to travel down all the way down to 32,600 level. Now, this is really insane level because now at 32,600 level, it's a target that the market may go. And if it does go there itself, right, you can imagine how crazy would this be, because right now the market is trading at about only 34,440. So that means it's going to drop another 1,000 error points. Now, I really don't think that it would be done in like a couple of days, but maybe progressively going down. And we are watching the market very, very closely. And all these fundamentals, I've been covering this over the last 3 weeks, been warning people that to be very careful. So 3 weeks ago, we have the resistance right here, remember? A strong resistance right here, and I said that the market can't go higher, it will pull back, and truth be told, for the last few waves we have gotten it correct. So congratulations to those who actually follow. And of course, right now you can see using our TWB system, you can see that the bars have turned to red, from yellow to red. It's a telltale sign for selling, and of course it's coming right down. And now we do have some indication that the indicators are telling us that the selling may continue down to 34,115 level first. Then we expect a little bit of pullback recovery before the potential downside, because MA200 is very nearby, 34,145. And if the market breaks the MA200, this is not going to be nice, because that means selling will be really coming in. And of course, if you look at the NASDAQ right now, the NASDAQ broke below the MA30 yesterday, okay, very convincingly. It also broke the major trend line that I shared with you a couple of weeks ago, and the RSI is not performing well. So there is a possibility for the NASDAQ to pull back all the way to the previous low, about 14,400 area. Now, if the market really persists as a gap over here to 13,600, this will basically send a wave shock to across many traders, because we've been buying a lot of technology shares, and I feel like NVIDIA itself, which is now not doing well at all. So you look at the TWB chart right now for the NASDAQ, you can see the colors turns from yellow to red. It's a telltale sign to sell. At the same time, the boys were also selling. You can see on the KSI and the KCX right now, the momentum is picking up. So the selling wave should be able to bring the NASDAQ down to about 14,711 level before we see a little bit of support over there. But if the market persists and go down further, 14,389 for today is the MA 200. And of course, we saw it before with the market break below the MA 200, the selling wasn't nice, and that will be something I'll cover tomorrow. Yeah, this is going to be very technical for tomorrow. But most important thing is I hope you guys have profit on the market, and I'll continue to like and subscribe and share my video. All right, guys, thank you very much. I hope you enjoyed this. This is Cal signing off. Take care. Bye-bye.